Hi guys. So a lot of you are wondering why the market has been falling and you do not understand what is bond market and all that kind of stuff. I'd want to show you this very important chart which is of US 30-year treasury. So first of all, what is a 30-year treasury? It is like you are giving a loan to US government for 30 years. You give them money and then they give you an interest. So it's just like doing a bank FD with State Bank of India or ICICI Bank. You are basically paying or giving money to the US government so that they will give you back annual interest. Look at the chart of this interest from 1988 till 2024. It has always been falling down, and in last 3 years it is actually going up. Now what does it mean that it is going up? It means that you are getting more interest now on the US treasuries, or the US government is paying you more money to invest in their bonds, to give them money. And why the US government needs more and more money? Because they have to do expense on social security, healthcare, on even paying back their interest. So they are taking new loans to pay back their old loans. It is a weird thing which is happening in the US right now. So you are getting 4.745% interest you are getting on a 30-year treasury. It has gone up from, let's say, 0.5% or 0% 3-4 years back to this high. You look at this multi-decade channel line, it is going down since 1988 and now it is going up. What it means is that whenever the interest rates go up in the US, people take money out of the stocks and they put the money in the bonds. Why do they do it? Because bonds are less risky. Making an FD is less risky. So it's just like making an FD with the US government is going to give you 4.7%. So why would you invest in risky stocks where you get 10-12% return on NIFTY? A lot of people claim you can also get more. I don't know, but this is how the bond market works in the US, and these rates are going up. You look at after 2019, these rates are going up. What does this mean? This means that more and more money will go from the stocks. From the stocks, possibly to the bonds, in search of higher interest rate. Okay, this is the reason why a lot of money has been pulled out from India. Whenever you are getting very attractive interest rate on the US bond, a lot of money flows out from India, from other emerging markets. It goes to US again, and people invest in bonds where they get 5-6% standard stable return. So this is the reason why I think that the market has more pain to go. We don't know how it's going to pan out, but let's see. In terms of the Indian market, I am suggesting not to invest in stocks which are dependent on exports too much, or which are not domestic stories. Like hospital is a domestic story. A person is not going to go to the US to get knee surgery. They will go to Max Healthcare, Fortis, all these hospitals. Same thing with the banking. You have a bank account with Kotak. You will not make a bank account with the American bank. So a lot of these tariffs are not impacting many local businesses. We'll go through some of them, which I would suggest you as stocks which you can study. So first one is the Bajaj Finserv, and the second one is Bajaj Finance. Bajaj Finance, 8,500 you can buy. Bharti Airtel, again local story, nothing much is happening outside of India. So 1,700 is the entry. Then you have BSC, also interesting, again local story. Then you have Chola Holding, Coromandel. Coromandel is very interesting because it's a agri stock. I'll quickly show you this one because there are like 29 stocks. We covered Bajaj Finserv, Bajaj Finance, Bharti Airtel, BSC, Then Chambal Fertilizer. Chambal Fertilizer is the agri stock which has been going up really smooth. Okay, and Chola Finance, again, very strong. You can actually buy Chola Finance today. Then you have Chola Holding, which is also strong. Coromandel, very strong. Again, agri stock went up, it seems like 100 rupees today. Eicher Motor, local brand, big brand. In auto, mostly it's going to be very tough because of the tariff. They are saying that they want to bring in the American cars and so on. I think Eicher Motor is going to be safe, or the safest auto stock if you have to invest in the auto. And then you have some pharma FMCG like Glaxo and Goje Phillips and so on. Interestingly, you have HDFC Bank, you have Indigo in the travel, you have JK Cement, and there is another cement stock which is Shree Cement, Ultratech Cement also. So what is working now is mostly a little bit of FMCG. If you look at Patanjali, you look at Marico, this kind of stuff. I don't usually buy FMCG, but focus on the hospitals like NH, Narayan Hridyalaya. You can buy it at 1600, or you could buy Medanta below 1200. Then you have pharma, which is very local driven. The one which is selling to the US will have a problem, but I would try and avoid pharma. I am trying to avoid FMCG. Local banks, HDFC Bank, Kotak Bank, even local companies like SBI Card, they are doing good. Okay, MFSL, which is the insurance company, agri stocks, Coromandel, Chambal Fertilizer, cement stocks, JK Cement, Ultratech Cement, Shree Cement. All these companies you need to look at. You need to look at the sector which is not going to get impacted because of the tariffs. This is the main theme which I think will last for next 6 to 12 months. A lot of these companies like Kotak Bank, HDFC Bank have very good profits. So if you are a long-term holder, you will not have an issue. Okay, so this is a little bit of my view on what you should buy and why you should stay away from the US stocks. And we started off with this US 30-year treasury yield. You should definitely keep an eye on this. As long as this keeps going up, the stock market will struggle because the money will go from emerging markets stocks to the bonds in the US. Alright guys, so this is for today. Maybe we meet today evening or tomorrow. We'll figure it out. Bye for now.